Hey everyone, coming to you today with the second principle that Chris and I use when we go and invest in single-family residential properties for our own personal investment portfolio. The name that I've given this principle is real estate is the most able investment. And the reason why we like to focus on this for wealth growing is, one, there's a lot of tax advantages that come with real estate, and you got to make sure that you take advantage of all of them. I'm not a tax accountant, so you would want to seek advice from a professional. But just understand when you're calculating your return for that asset that you can look at a number of different things that write off the actual income that you receive from that property. So the first would be you can depreciate rental properties. It's a straight line depreciation, 27.5 years. Next, all of your interest that you pay on your loan, you can write that off. The property taxes that you pay, you can write that off. Any business expenses that you have to incur to manage and operate the property. You just look at it as like a business, and any expenses that go into running that business, you can write off that. So it's very able in the way of producing income for you in a tax advantage type way. Other things is you got a return that you collect from cash flows. So it's an asset that you can go and produce your own dividend from it. So you go rent, and when you rent it out, that check shows up every month. Typically in our market, its terms are typically 12 months at a time. So you got that dividend check that comes every single month. The other way that you can maximize the return on that rental property is you can get leverage on it. So real estate is one of the very few investments that you can make where you only have to put in 20 to 25% of the actual property's value for your investment. Someone else will literally give you their money so that you can go and buy the house. And most people go with traditional debt from a bank, but there's a number of ways that you can receive money to go pay for that asset. And the real win would be is to go buy a rental property and you buy it on 20 cents on the dollar. So you put your 20% in there, and then someone literally pays off the debt with their monthly rent for the rest of the time you hold that asset. And kind of the last thing that I would say in the able bucket is a part of your return is just going to happen through appreciation. We talked about it in principle 1. Your property on average is going to appreciate in all markets about 4% a year. The longer you hold that property, the more it's going to be worth, and the more advantages through all these other able aspects, you're going to increase your return. So if you enjoyed hearing about this principle, please do subscribe to our YouTube channel, follow us on Instagram, and look for the next few that we're going to post up.